So we've talked about the financial statement analysis, and now let's show you how to do the ratio analysis on your Excel worksheet. So you've got one for your ratio worksheet. Normally, we're using information from all the other statements, so really everything could be a non-yellow background, just blank. However, I also created this and put in yellow where it shows we're pulling information from another statement. And this is nice because then if you want to just do ratio analysis and not create all the financial statements, put numbers in yellow in from financial statements you already have, and then it'll calculate your ratios. So that's why I've done a little bit of yellow here. I'm going to bring this down just a little bit and then do Windows, the View, freeze panes. And so then as I go down, I'll still be able to see this information. So we have information from the income statement, information from the balance sheet. Net farm income from operations, plus or equals, click over on the income statement. Net farm income from operations. Interest expense, plus or equals income statement, total interest expense. Value of unpaid operator labor. The reason we need this is because our labor expense on our income statement only include paying for the employees, and really the owner is using labor too, and so they need to be compensated. So as a proxy, we're going to do the family withdrawal. So from the cash flow statement, cash withdrawal from family living. And then R is your return to assets as a dollar amount. And this is your net farm income from operations, plus interest expense, because this is really before we deduct the interest, so we already deducted it, let's add it back in. And then minus the value of unpaid operator labor. So if they were just employees and we paid them, we subtract that out. So the assets, we made $67,802. IE is return on equity in dollars. That's the one way to think about it. It's the net farm income from operations minus the unpaid operator labor. Value of farm production is off of our income statement. Up next to revenue, value of farm production. Total non-farm income, income statement, off-farm wages. Depreciation, plus or equals income statement, depreciation. Current principal is off the cash flow. Down here in financing, we have operating loan numbers, and then scheduled principal payments is the current principal we're paying on our non-current debt, and so that's the number we want to refer to. Income tax expense, plus or equals income statement. Income tax expense is $21,000, but this includes some personal, and so we want to subtract that out. And as you see, when I clicked on and then hit enter, and so that's $18,639. And then our operating expenses from the income statement. Total farm operating expenses. That's all the income statement. It should say income statement and cash flow statement information. And now we also need balance sheet information. We have basically 4 balance sheets: the cost-based, the beginning and ending, the market-based beginning and ending. So our current assets plus, click here to get over to the beginning balance sheet. Up here, current assets, total assets, balance sheet, total assets, current liabilities plus balance sheet, total current liabilities, and then balance sheet total liabilities, total business liabilities. Because those four statements were in the same order, once we have these, we can just copy it across. And it might be nice here to just click on one of these and say it says current liabilities for the ending market value is $229,834, and then come over to your balance sheet and just look at it. And for our market-based balance sheet, our total current liabilities is $229,834. So we're pulling the right number for the right thing. And it's always good to check those because sometimes you could do something off. We don't need to pull information for our net worth or owner's equity from the balance sheet because we can calculate it. Our total assets minus total liabilities. And then copy that across. Check one of them. It's doing what we think it should be doing. One thing to think about is these numbers are for a particular day. These numbers are over a year's period. So when we're using formulas that compare these numbers to these numbers, we need a way to be able to have them both kind of reflect what happened during the year. So to convert balance sheet numbers to that, so what we do is take a simple average of the beginning and ending. So for our book value or cost-based ones, is what we do is plus, open parentheses, the beginning plus the ending, close parentheses, divide by 2. And you can just copy that down. No, because that's not the right place. Sorry. Okay. Another way to do this is this is our debt or total liabilities. We can say each one times 0.5 since we're taking a simple average. So beginning plus the ending times 0.5. And the equity, same way, plus the beginning times 0.5 plus the ending times 0.5. And that's a simple average. Another thing to kind of look and make sure you've done it right is it should be halfway in the middle. And here, that's 311, and it should be 630 something. And so I know that I used the wrong number there, so just say plus, and show you how to do it. Opening parentheses, the beginning plus the ending, close parentheses, divide by 2. And so there, we're seeing that it is the same. The other thing you can do is highlight the debt and equity. Down here it says it's 635,887, which equals the average assets. So it's just a couple of different checks you can do to make sure you're doing your calculations right. So here's my market. Beginning times 0.5 plus ending times 0.5. Debt plus the beginning times 0.5 plus ending times 0.5. Equity just right underneath it, so I can actually just copy that down. Double click to make sure it's doing it right. Yes, it is. So now we're good. We've got all of our information in here that we need to calculate all the other ratios. First are our profitability ratios. Our return on farm assets is simply the return on assets are divided by our average assets. We can do this for the market-based and the cost-based. The return on assets is the same number, so what we're dividing it by, though, is a different average assets. So we get different amounts. Return on equity is our return on equity divided by our average equity. Return on equity divided by average equity for market. Cost of farm debt is our interest expense divided by our average debt. And then we have operating profit margin ratio, which is simply the R, return on asset or return to assets, divided by our gross revenue. And, or this can be divided by value of farm production. We don't have gross revenue on here, so I'm going to do value of farm production. Now we need to do net farm income before taxes. I should have had it over here in my income statement info, but I did not. And so what you can do is just add a line in, insert, let's see. So what's happening here is, there we go. So here is line 19, and that's what I can do is say net farm income before taxes, make it yellow, plus go to your income statement, and here's net farm income before taxes. And then down here I can just refer to it, plus. Is what was happening there is because up above here is my line for my freeze panes. It was down just a little bit, so that looked like it wasn't even there. And so I had to scroll up to find it. And the way that you can fix that is to go here just below where you were, do unfreeze, and then go in here and do freeze. And now it moves that line down, so it's not going to disappear.